Today in the livestock, we've got a kind of a divergence between the beef and the pork side. Now, live cattle were mixed. That USDA report was somewhat bearish, but the futures are kind of holding their own. It just seems that the decline over the last couple of weeks to that oversold situation with the futures might be digesting already the negative part of the cattle on feed report on Friday. So perhaps the worst is over. Right now that we are, kind of moving right just a little bit sideways. The CVOL right now is at 16.1%. So really, the live cattle is kind of holding its own in spite of the fact that it was bearish. I can't say the same thing for feeders. The feeders did fall. Placements were higher than expected with lower cash market last week. Box beef prices still on the decline, really weighing heavy on the futures prices and sending the futures to new lows. Looking a little bit bleak right now today. We'll see if it continues through tomorrow. But right now there is some, pretty heavy pressure on the feeder futures right now. Hogs are completely the other way. It really gapped up. The bullish hogs and pig report really sent the market reeling. The futures are trying to narrow the gap between the cash. The gap today went from 77.20 high on Friday to 79.75 is the low today. So that's an awfully, technically a huge gap to fill, perhaps at some point right now, but the market's looking very, very bullish. Tighter supplies through the end of the year is really, one thing that's going to be, positive and kind of pushing the market even higher. I expect that, with the CVOL at 37.1%, that it's going to increase when we come back tomorrow and start to look at it. But this is a huge gap that we haven't seen in quite a long time, and perhaps that's going to put the lean hog market back on the map. But I expect that this is going to add a lot more volatility to that market.